Hi there, welcome back to Finance Talks My Robot family. In today's video, it is the fact that the real estate market is always evolving. When ripe with opportunity, an investment plan or business area will easily dry up. Being able to recognize current market opportunities and having the versatility and foresight to pivot to take advantage of them is an important part of being a good real estate investor. For decades, real estate has become the go-to investment for those seeking to create long-term wealth. Sign up for our informative real estate investment guide to help you navigate this asset class. Should investors invest in the real estate market in 2021? This is an intriguing question for investors in the future. There are a number of factors to consider, ranging from lower mortgage rates in the United States to rising home demand and costs. In order to assess if the real estate sector is a successful investment, but the market often has negative patterns. COVID-19 resulted in a buyer's market. Why is there a seller's market when home prices are down? It seems counterintuitive. The US went into lockdown at the start of the pandemic in March, affecting both supply and demand for housing. Home sellers were prohibited from meeting buyers, and buyers were barred from viewings and meeting with inspection agents due to lockdowns. As a result, the ideal conditions for a buyer's market were established, with excess homes and fewer buyers. As the pandemic spread, however, more and more sellers took down their listings, and new development came to a halt. Suddenly, supply became limited, and home prices began to rise. As a result, it's a seller's market all over again right now. According to Realtor.com research, the median selling price is $350,000, up 11% year-over-year, and days on the market have decreased to 54 days, down 18% year-over-year. As a result, this seller's market is expected to continue into 2021, making it more difficult for consumers to find a decent offer. Housing shortage in the United States. Despite the fact that sellers have a small supply and prices are rising, there is a significant shortage of houses on the market that might be unable to meet demand. According to the National Association of Home Builders, housing starts will not rise as quickly as demand in 2021, which is another point in favor of a seller's market. Because of the economic uncertainty, builders and sellers believe they will be able to get a better price in the future when the business conditions improve. Housing prices. Due to market conditions, home prices are expected to increase in 2021. According to Zillow, house prices in the United States are expected to increase 7.9% between now and October 2021. This sharp rise in prices would make investing in real estate extremely difficult. Prices are related to housing demand, and as more people migrate to the suburbs as work from home continues beyond the pandemic, demand will rise even more. In the future, this increase in demand will bring more pressure on prices, especially in the suburbs. Simultaneously, prices of apartments in city centers will fall, as seen in New York City. Lending environment that is more strict. The pandemic wreaked havoc on many industries and resulted in a significant increase in unemployment across the United States. Rising debt levels, combined with job losses, have put a strain on homeowners making monthly mortgage payments. As a result, some limits have been imposed on new homeowners, as lenders face a higher risk of borrowers defaulting. Credit score criteria would be more strict, such as a minimum of 720 instead of 620, and most lenders will demand a down payment. Debt-to-income and loan-to-value ratios, for example, would have more stringent criteria. Even though 2020 was a particularly difficult year for real estate, there is still room for prime real estate investment in down markets. Unwanted shopping, hotel, and office space is repurposed. Many commercial investors will certainly be saved by adaptive reuse, the process of transforming and redeveloping unwanted real estate into a new form of real estate that better suits current and future market demand. The coronavirus outbreak had a major effect on hotels and entertainment centers, office buildings, and retail. Recent reopenings have helped to mitigate the effects, but historically low demand has resulted in a number of companies closing or declaring bankruptcy. Recovery is inevitable, but it will take time, and property owners who are struggling will need to be resourceful in the meantime. TWO high-demand industries are affordable housing and commercial real estate. Converting an old hotel in the city's heart into affordable housing or an old retail building into an industrial distribution center or warehouse might be a more lucrative long-term option. While there are many obstacles to tackle in this phase, such as zoning and city regulations, Real estate for the industrial sector. For many years, industrial real estate has been one of the best performing commercial real estate sectors in terms of returns and demand. The global pandemic accelerated demand for industrial space in many ways, placing pressure on cold storage, warehouses and distribution centers, as well as data centers in particular. Although this recent surge in demand is likely to be temporary, this sector is expected to have another strong year in 2021, with opportunities for further development. Mortgages that have defaulted. There is talk of a possible foreclosure surge in 2021 if the new Biden administration does not enforce any national foreclosure moratoriums or safeguards. According to Black Knight, 4.57% of all residential loans are 90 days or more overdue as of October 2020, equating to around 2.258 million people. The 202,000 forbearance plans that were due to expire in November 2020 are not included in this figure. The government has been using quantitative easing, which is a gradual and steady flow of cash into the financial markets, to help keep them afloat. However, it can only go on for so long. Banks will eventually be forced to reconcile their books and either foreclose or sell unpaid loans at a loss. For the banks, no scenario is ideal, but in most situations, a mass sale of unpaid loans is the better option, as it provides them with the cash they want and need now while still reducing their overall burden. Millions of non-performing mortgages were sold on the secondary market prior to the foreclosure wave that followed the Great Recession. Investors of all sizes were able to buy these loans at a significant discount, with the aim of finding a long-term solution to the delinquency, which may include a forbearance plan, loan modification, deed in lieu, or foreclosure. Foreclosures take time, and investors hoping for a burst of foreclosure assets in 2021 are losing out on the real opportunity. I started investing in real estate with non-performing notes, NPNs, shortly after the Great Recession, and I'm gearing up for the onslaught of NPNs that will inevitably hit the market, both in the residential and commercial sectors. Rental property from cash-strapped landlords in depressed markets. Although many rental markets are seeing an increase in demand and rental prices, others are not. High-density urban areas are seeing a mass migration of people moving to the suburbs in search of more land and less expensive housing. Hundreds of thousands of landlords have been left in the dust by eviction moratoriums, unable to evict non-paying tenants but also liable for maintaining the property and paying taxes, insurance, and their mortgage. Many cash-strapped landlords would be forced to sell at some stage. Investors with the patience and money to ride out the current storm can be able to get a good deal on these rental properties. Repair and resell. In 2020, the fix and flip market has been extremely active. Initial fears of a new real estate bubble were rapidly dispelled as home prices skyrocketed and demand far outpaced supply in most markets. Fix and flip operation was up at the end of 2019 and the beginning of 2020, but profits were down. In the second quarter of 2020, things began to turn around as some investors stepped back from the market to see how the coronavirus pandemic will play out. Given the continued strong demand for newly renovated homes, I assume 2021 will be another busy year for fix and flip investors. Investors will need to be meticulous about their numbers, as I expect the hot real estate market to attract new investors, rising competition and lowering returns. Unfair advantages. How Real Estate Became a Billionaire Factory is a book about how real estate became a billionaire factory. You're probably aware that real estate has long been a playground for the wealthy and well-connected, and that it has also been the highest performing investment in modern history, according to recently published results. It's easy to see why, given a number of unfair advantages that are unheard of in other investments. But those barriers have crumbled, and now it's possible to create real wealth through real estate for a fraction of what it used to cost, allowing you to take advantage of previously unattainable advantages. So that's it for today's video. I just wanted to say, thank you so much for watching. If you're still watching, you're an absolute legend, and remember to smash the like button and the subscribe icon so you get the latest updates when we post the new videos. See you soon.